Hello aspirants and welcome again to Legacy IAS Academy. Now we might already know that RBI acts as a regulator for the banking system in India. So it regulates the entire banking structure, it does open market operations, it acts as a banker for the government of India, so on and so forth. Now while it undertakes all these functions, it also ends up making profit. See, of course, it could make losses also when you're doing currency exchange in the open market operation, but RBI is doing things greatly and it is making huge amount of surplus. So in this lecture, we will be discussing why and how does the RBI transfer that surplus to the government of India. We'll also see where this surplus is coming from, and we will then understand why is it transferring it to the government of India and how that transfer is done. So let's get started. What is the news, or why is this particular thing in news? That is because the Central Board of Directors of the RBI, they reviewed the economic capital framework. So the Central Board has reviewed the economic capital framework. Now, what is this review of economic capital framework all about? In this economic capital framework review, basically the RBI sees how much surplus it has generated and how much it should keep aside and what amount it can pass it on to the government. All those things are analyzed. Yes, a great detailed analysis is required here because the amount to be kept aside will depend upon how much is the expectation of bad loans, how much is the expectation to keep for shock absorption in the coming years, so on and so forth. So that has been done, wherein takes into consideration the risk provision, the surplus distribution to the central government, so on and so forth. So what is the amount that it has come out with? So it is estimated as of now. The actual figures will happen when the actual transfer happens, but after this review, we have got to know that about 2.5 lakh to 3 lakh crore in the range, the amount in the range of 2.5 to 3 lakh crore would possibly be transferred by the RBI to the government of India or the central government. Now, this is the amount that will be probably transferred as it stands. So let us understand how or how much has been RBI's surplus transfer to the government of India in the last 10 years. So here is a histogram depicting exactly that. So if you look at financial year 12-13, that is about over 10 years ago, it's just 33,000 crore, 33,110 crores. And right now, if you look at just a year before, we have, that is financial year 23-24, we have about 2.11 lakh crore. This shows 2.11 lakh crore. That means over 2 lakh crores. Of course, there have been fluctuations. There is no doubt about it. You can clearly see that there has been fluctuation and this probably will further go up. Now, why the fluctuation? Because the surplus will differ depending upon the, it's not a business. RBI is not run as a business. The first and foremost purpose of RBI is to, govern the entire economy, control inflation, at the same time to regulate the banks and to ensure that the economy is stable. Now, while doing so, it is generating their profits as well. Now, that may also fluctuate because of the external forces, the market forces, the global economy, the requirement for Indian banks, Indian industries, so on and so forth. That is why huge fluctuations will be there, as a result of which you will see the fluctuations in the surplus that is transferred to the government of India. So this was the last tranche, 2.11 lakh. Now this year it is estimated that it will be around 2.5 to 3 lakh rupees. Now, coming on to the question, how does the RBI make profit? So, of course, it is basically mandated with a lot of regulatory provisions and governing provisions, which of course includes to keep the inflation or the prices in check. India has inflation targeting, wherein India targets inflation in the range of 4 plus minus 2%. That means India or the government, the RBI or the monetary policy can afford to have inflation between 2 to 6%. But if it goes below that or beyond that, it has to manage. That is one of its functions. It also manages the borrowings of the government of India as well as the state governments. Now, RBI acts as the banker to the government of India as well. For example, if the government has to issue bonds, So it is the RBI that issues those bonds on behalf of the government. So government is not directly going to issue the bonds. It is the RBI that is going to do on behalf of the government. So these are the functions that it has. But what about the money? Where is the money coming from? Because just to regulate the banks, if you're regulating the banking system, money will not come. So where is it coming from? It typically comes from the returns that it earns in its foreign currency assets. That is one thing. So RBI does open market operations. It buys and sells dollars. Now the currency exchange rate keeps fluctuating. So because of that fluctuation, when RBI buys and sells it at a right time, so much so that it will produce some amount of profits over there, that is where in the form of bonds as well. It also of course issues bonds, treasury bills, etc. So the returns it has on that, which is given to the bond holder, in addition to that, can also be generated from here. At the same time, the deposits with other central banks. So all these are the methods through which RBI is earning profits, or you can say earning interest, which could be considered like a profit or a surplus. Now, it also earns interest on its holdings of local rupee denominated government bonds. In addition to that, one more thing is important. You have the repo rate and the reverse repo rate. Now, the repo rate is the rate at which RBI give loans to the scheduled commercial banks for short term. Now, it charges an interest rate to those banks, right? So through that also RBI earns money over here, right? So this is where the RBI is earning money from. Now let us understand what are the expenditure of RBI. So the main expenditure of RBI is just the printing of currency and the staff. So the regulatory measure also, you need a huge amount of staff. It has huge battery of employees which is there, so their salary etc. and perks are included. At the same time, the amount utilized to print the notes. Now 500 rupee notes is not printed in 500 rupees. Maybe the cost will be somewhere around 2 to 3 rupees, but each note will require that much amount of cost. So printing money, the printing of currency requires cost, which is incurred by the RBI. Various transactions etc. done on behalf of the government, behalf of India etc. will also be its expenditure, right? So overall it can make a surplus, and it is making a surplus. So when it makes a surplus, what is the fate of that surplus? Let us understand that. So is there any arrangement between the government of India and the RBI on the surplus? See, when it comes to the arrangement, it is said that the RBI transfers the surplus. What is surplus here? The excess of income over the expenditure. We saw how it is earning and where it is spending. So the excess of the earning over the expenditure, it has to transfer to the government of India in accordance with Section 47, Allocation of Surplus Profits of the Reserve Bank of India Act of 1934. Very important for your prelims exam to know that the RBI Act 1934 under its Section 47 clause asks the RBI to transfer the surplus, that is the excess of income over the expenditure, needs to be transferred. Now, this transfer, this is the furtherance of the same section. This is not just the entire transfer, but this transfer needs to be made after due consideration of the amount that the RBI would want to keep it with itself in order to absorb any future shocks that might be there, or for various other reasons. Let's see what they are. So this additional surplus needs to be transferred to the government of India after making provisions. Provisions for what? For bad and doubtful debts, for NPAs, non-performing assets that will be there in the Indian banking system, which is bad assets, doubtful debts. Depreciation in the assets will also happen. Contribution to staff and superannuation funds, if there are pensions, if there are perks, superannuation, the funds that has to be transferred, all other matters for which provision is to be made under this act. So all these costs, all these reserves, it will keep aside, and then whatever the surplus is remaining, it will then transfer it to the government of India. Now, does RBI pay taxes on these earnings? So many a times RBI would of course propagate that you should pay taxes, which is very right. We all should pay our due taxes. We should pay them. That is a part of patriotism, to pay the taxes for the nation and its people. Of course, but does the RBI pay taxes? No, RBI does not pay taxes. Anyhow, it's not there to make profit, and whatever it is being making, it is keeping aside for the stability of the economy, as well as transferring it to the government of India, which will further utilize for the citizens and the nation, as a result of which there is no, because the taxes is a small part which goes to the government. Now here the entire surplus is going to the government. So in fact, RBI is not paying taxes, that is one thing. But the other side of it is transferring the entire money to the government of India. Not entire money, mind you, it is keeping some aside and then transferring. As we have seen previously, it has transferred 2.11 lakh, and this year probably around 2.5 to 3 lakh crore. Sorry, 3 lakh crore is what it is going to transfer. So it does not pay any taxes. Its statute provides for exemption from paying the income tax. Section 48, which provides exemption of bank from income tax and super tax of the RBI Act. So Section 48 of the RBI Act exempts the RBI from paying any taxes. Now, is there any explicit policy when it comes to the distribution of surplus? There is no such policy as such. However, the Y.H. Malegaon committee was constituted, and this committee recommended that a higher percentage of the surplus should be given by the RBI to the government of India. And subsequent to the recommendation of this committee, RBI has done that. We have seen a higher percentage going to the central government from the RBI as the surplus. So is there any explicit? No, there is no explicit treaty or policy as such, but a technical committee of the RBI, which was headed by Y.H. Malegaon, as I said, recommended that a higher transfer to the government should be done by the RBI. So it recommended that in 2013, and since then we have seen regular transfer of a higher percentage of RBI surplus has been going on to the government of India. Now, have the RBI and the government of India have deferred issues on this, or deferred let's say opinion on this? Absolutely yes. Have they differed with each other? Yes. What is the difference? Government at times have wanted more and more surplus to be transferred, but RBI did not want to go ahead with that, because it wanted that some higher amount should be kept as reserves to fight the future situation, unforeseen situations, and to keep the economy robust and to maintain the independence of RBI. So RBI tomorrow, if it transfers too much, should not be waiting for the government of India to give some money to do open market operations that will destroy the independence of the RBI. So there have been a tussle with respect to the percentage of sharing that is there, which RBI wanted to give and which the government wanted to actually have. So those kind of differences have been there, but yes, over the years, as we see, there has been a huge amount of transfer of money to the government of India by the RBI. Thank you.